Demand for gold jewelry in India fell 25% in the July to September quarter. That's a significant fall. Demand was impacted by a couple of factors: the introduction of GST, tougher anti-money laundering rules linked to the purchase of gold, and also some sluggishness in demand. Pradeep Pandya is with us with the highlights of a report from the World Gold Council. Pradeep, that's a significant fall, a 25% fall in both volume terms, and value was also, I think, 28% lower.
Definitely. So 25% decline in volume is really interesting. So last 3 quarters saw some kind of an improvement, but then again this quarter was really disappointing in a big way. And as you mentioned, there were 2 major reasons, as the World Gold Council has also put forth, is GST and Anti-Money Laundering Act. Now they believe that because 70% of the industry is actually, it comprises of smaller players who found it really difficult to adopt GST well in time, and they'll probably struggle for a few more quarters, but there should be some recovery going forward. As some of them will definitely be able to cope up with GST in this quarter and next. And money laundering bill also got amended. That is another relief. So maybe this quarter, the October, November, December, these 3 months won't be as bad as the previous quarter. But nonetheless, the last quarter was really a big disappointment, not only because the jewelry demand fell, but also the investment demand fell from around 40 tons to 30 tons. And that is mainly the bars and biscuits, not really ETF. ETF is still very small in India. So investment demand it comes through bullion, actually. But what is also interesting is, like you guys had mentioned earlier, that the demand is likely to fall to a 7-year low. In fact, for second year running, the demand will be below 5 years average. And that is really interesting, that maybe there could be a slight medium-term or long-term trend which is emerging in Indian markets. And that is the question I asked to the India Director of World Gold Council, Mr. Somasundaram PR. Let's listen in what he had to say about it.
Yes, we did some analysis some time back, econometric analysis going back to 25-year data and linking gold demand to how it has behaved in response to various factors. One thing came out clearly: increase in income is the prime driver behind gold demand. Then comes inflation, then comes gold price, and then monsoons. Okay, these are some short-term factors as well. So, but what we saw clearly was, for every 1% increase in income, there is a 0.9% increase in demand. But for every 1% increase in price, there is only a 0.5% drop in demand. So that is, this is what the analysis showed. So clearly, income drives gold demand, because it's very clear, part of the income goes into savings, a part of the savings goes into gold, and that is structurally the case in India for the households. So given what we are seeing, rural income being doubled by 2022, GDP growth, we do expect that these factors will be hugely positive for gold demand.
So World Gold Council definitely believes that there is not much investable surplus with Indian households that is probably responsible for the slump in gold demand. But as we can see, there is enough money flowing into the mutual funds, into equity, and that's the trend globally. Actually, if you look at the global flows into ETF, they have also slowed down in a big way. Money is flowing into equity funds rather than gold ETFs.